Okay, we're getting towards the end of the accounting cycle, so now we're getting into topics like adjustments. We've already looked at a lot of the financial statements, and we're going to get into closing the books. But first thing we're doing is we're looking at basically adjustments. And if you looked at your note, I'm not going to go over it on the screen here, but if you looked at the note, it talks about main ones of prepaid expenses, prepaid rent, and supplies. Those are the ones that are mentioned, and I'm just going to kind of go over that quickly. So the idea of prepaid expenses, right? So things that you could pay for in advance. So prepaid rent, for instance, is one of those examples. Let's say that you have a particular office or something like that, and you prepay half a year, or you prepay a year at a time because that's what the lease states. That means that you pay, January 1st, pay for 6 months, you pay for 12 months. Let's say, for argument's sake, it's it's $1,000 a month. So if you're going to pay for 6 months in advance, you're going to pay $6,000 on January 1st. Well, the way that then is handled is that you now have a $6,000 asset called prepaid rent. So that asset then has to be adjusted every month as you pay your monthly rent. So right now, if you don't have prepaid rent, you would write a rent check, or you would send the money, an e-transfer or whatever it is, every first of the month, and it would be processed and the rent would be paid. In this case, we're talking about kind of almost like having an account that's set up, and it gets debited, every first of the month, and then you have a total left over. So that's basically what we're doing, is that we are looking at things like prepaid expenses, so rent. Another one's prepaid phone. If you had a certain phone plan that you had to pay in advance, same kind of idea. And then the other one is insurance. So insurance can be paid, again, monthly. It can be paid in installments quarterly. It can be paid every 6 months. It can be paid a year at a time, whatever it is. And as you go along, the value of your prepaid prepaid interest asset would go down as it's being used every month, right? Just like you're doing a monthly payment, except for you've already paid for it in advance on the January 1st or whatever date we're talking about. The last one we talk about here is supplies. And supplies is a little easier to understand in that, you order a bulk order of supplies. You get pencils, pens, paper, staples, whatever, all the office supplies you think of, and then as you do business, right, you're going to expend that inventory. You're going to use pencils, you're going to use ink, you're going to use paper, you're going to use all that stuff, and over time you're going to then do an inventory on those expenses. No, you're going to do an inventory on those supplies, and you're going to discover, you've used $300 worth of the $750 that you purchased in January 1st. So then you'd reassess the value, or you would adjust the value of supplies on hand from 700, right, down. If we use 300, I think I just changed the numbers, but whatever. We started with 700, that's how much you spent on January 1st, and you've now used $300 worth of it. You'd have $400 worth left in your supplies account. Okay, so what does that look like in terms of journal entries? Excuse me. So, in this is the one practice practice assignment, and it talks about that the beginning balance in the prepaid rent account is $14,000, and the monthly rent is $2,000, right? Okay, so this is looking at the end of June for adjustments. So if we know that the prepaid rent account is $14,000 a month, that means we know we have enough to pay rent. And basically we'd write, whoops, great, hold on a second. We would write in our June 30th entry into the journal, and we'd have the debit being rent expense, and rent expense would be for $2,000 because that's how much the monthly rent is, right? So we're doing the end of the month entry, so end of the month entry right there, right? June 30th. So rent expense is the one, because every time you use one of these types of supplies, or you use up a prepaid account, some kind of asset, remember that when you use something like that, an asset, to make money or to sustain your business, you have to use an expense account. So hence why we have rent expense. And the other side is our asset, which is prepaid rent. That's an asset account, and we're going to credit that $2,000. Okay, and then what did we do? We paid rent for June. Right, so that's basically the journal entry for paying rent from a prepaid account for the month of June. Okay, so then we have the next question. So it's still 30th, and we have information that we have a 12-month insurance policy we purchased for $12,000. No, sorry, $1,200 at the beginning of the month, and the balance is $1,200. Okay, so we're going to use a month's worth of that. And how did we figure that out? Well, we took the $1,200 divided by 12. You get, right? You get $100. So you have $100 per month in insurance costs. So for the end of June, you have your insurance expense, $100. Okay, if you want to put in the expenses, so let's just put rent expenses 501 and 502. Prepaid rent is an asset. We're going to call that 130, and getting ahead of myself at 131. These numbers, of course, just correspond with, 100s are assets, 500s are expense. They don't have to be the same as mine, just to give you an idea there. So this is our asset account called prepaid insurance, and we are going to credit that $100. So that is paying insurance for the month. So we've got paid insurance for June. There you go. Okay, and then the third one. Third one's about supplies. So it says balance in the supplies account at the beginning of the month is $1,000, and inventory is taken at the end of the month shows supplies on hand worth $300. So that could be talking about anything. Say it's just talking about your paper, and you went through $700 worth of paper. So you need to reflect that based in your asset account, right? Because you've used that, you don't no longer have it, so you have to make that adjustment. So again, we've got the 30th. So we're using supplies, so we've got supplies expense. Gonna make that one 500. Okay, and we started with $1,000. At the end of the month, we have 300. Okay, our quick math should tell us that's a $700 difference. And then we have, this is just called supplies, because that's what the account is called. And then supplies being an asset, we're going to call that one, say 110, whatever it is. Okay, 700. And then this is the supplies used in June. Okay, so that is all there is to the journal entries. That's all we're looking at in terms of adjustments. So what have we done? All we've done is we've looked at the idea of paying our rent, through a prepaid program where you pay for whatever a month, or in this case it was, it doesn't actually tell you how much, it just says the monthly rent was $2,000. So anyway, basically how do you figure it out? If it's $14,000, it gives you the $2,000 total. You don't have anything to figure out. You already know it's $2,000 because it tells you, right? We're just adjusting the value of the asset called prepaid rent. The insurance expense gives you a calculation to make. So it says $1,200 at the beginning of the month, and the balance is $1,200. A 12-month, so a 12-month, asset, and it was 12,000. Okay, so if you divide that, you're going to end up with $100, right? So it becomes basically just looking at how much is it per month, right? So that's $100 per month, and that's how we ended up with this total for the adjustment. Okay, because we're basically, all you're doing is paying your insurance costs for the 1 month. We figured out how much that is based on how much you paid for over what period of time, right? So $1,200 for 12 months equals $100 per month. Now the supplies, it gives you that there was $1,000 on hand to start, right? $1,000 on hand to start. By the end, you had 300 left, so the difference between those two numbers is 700. So that would be $700 has been used over the month. So we have to account for that, because you can't have supplies still being $1,000 because you've used some of it, right? So you're going to adjust how much you have. You're going to expense, how much you have used. So supplies expense, the $700. You're basically minusing the supplies out of here. There's your credit of $700. You're going to end up with supplies being $300, right? When we go to do the next step after this is going to be doing another worksheet, and you'll see how that works. But this is basically just the journal entries and getting the idea of that adjustment, to the assets. This is where you really have to get your head around what we're doing, right? Adjusting values. Because this is where it starts to get not tricky, but if you don't understand what's going on, it becomes the actual worksheets, and doing the adjustments can get a little bit tricky. All right, if you have any questions, then just let me know.